Good afternoon, everyone, and welcome to our regularly scheduled Thursday afternoon Innovative Business Advisors webinar. We're going to get started fairly quickly here today because we have a lot to share. On the panel today are just myself and Steve Denny. And Steve will be giving us an update on the changes to COVID relief availability for businesses or as a result of the new America Rescue Plan Act. This is the name of the current act, the most recent act that was signed into law on March 11th. So that is the American Rescue Plan Act. So now we have three names, three iterations of the law. And as I was saying earlier, for those who may have heard Steve and I chatting before we started the webinar, it seems to be getting more and more, I don't know if inclusive is the word or more and more lenient is the word relative to who has access to the funds or what funds can be used for what purposes. I'm not going to try to explain anything. I'm just simply going to turn the program over to Steve and let Steve begin by sharing with you what we know, because there's a lot that's come to us over the last week. So Steve, go ahead and take it away.
Fantastic, Marquita. And as always, we're so appreciative of you stewarding these particular webinars. Appreciate it very much. You do a wonderful job of grounding us every time we get started. So as Marquita said, the primary emphasis today is on the American Rescue Plan Act of 2021. We're going to give a short overview of the Plan Act as a whole and then dive right into many of the specific things related to various aid programs for business, which we've focused on for the last 52 weeks. So we've had, actually, of the 52 weeks, we've had 46 webinars, Marquita. Phenomenal, unbelievable. So here we go. This particular plan, as Marquita had mentioned before, this all started with the CARES Act back in March of last year, which then was supplemented by various individual laws, and then a major revision with the Economic Aid Act, which passed and got signed in December. And now we have the new administration's American Rescue Plan Act. So it specifically has a major impact on five of the major programs that were originally a part of the CARES Act, and it creates a whole new program called the Restaurant Revitalization Fund. And we'll spend the majority of the time today talking about that, and then we'll touch on the changes for all the rest of the programs. Also, I want to highlight that many people may have seen this, but tax day has been extended. So the IRS issued a notification earlier this week extending tax day for individuals to May 17th of 2021. And May 17th of 2021 is also the day when your 2020 taxes are due. So they extended that period of time from April 15th to May 17th, and there is no penalty on the postponement of your taxes if you don't pay between April 15th. So big changes. This is a really busy slide, and it is designed to give basically a one-sentence overview of the American Rescue Plan Act that President Biden signed into law on March 11th. A couple of things of note. I wanted to start with this act. A lot of the Republicans have talked about how, less than 20% of it really relates to COVID aid. And that may well be true. There is an awful lot of other stuff in there. But I thought, what is $1 trillion? I was having some conversations earlier this week with somebody about what does it take to spend $1 trillion? And we decided to do a little bit of a look up there. We had a little bit of a guessing game going, but $1 trillion is a tremendous amount of money. Hard to even think about $1 trillion. This plan is $1.9 trillion, so almost $2 trillion. And I guess the easiest way to wrap your arms around that is if you were to spend $2 million an hour, nonstop, 24 hours a day, it would take you 411 years to spend $1.9 trillion. So every hour, if you spent $2 million, it would take you 411 years to spend that much money. That is a lot of money. The big thing, the big headline of the American Rescue Plan Act was to provide the maximum, what they called a recovery rebate of up to $1,400 per eligible citizen. And that phased out depending upon what your adjusted gross income was from the prior year. But that was the big thing, to get those checks out there. And as we've all seen in the news media, I think the Treasury's been working overtime to get checks out into the mail or direct deposits made. But there is a lot of other stuff in there. One of the interesting provisions is that they also are making student loan forgiveness tax-free through 2025. This is particularly interesting because right now there is no program for student loan forgiveness. The only two existing programs which have been in effect for student loan forgiveness is you can apply for forgiveness under special circumstances, primarily if you work in public service or if you're a teacher. But this is an interesting additional provision. And I've seen a couple of commentators and read a couple of articles that are speculating that the reason this was included is that at some point in the future, the Biden administration is going to seek a bill from Congress or through executive action will begin to provide some form of student loan forgiveness. So the American Rescue Plan Act took care of the tax implication of that, but it did not specifically call out student loan forgiveness. But there is a lot of other things in there. And again, this will be as part of the replay. So if you have not seen a summary of it, this will basically give you a quick one-sentence summary of all the major points of the program itself. So with that as a bit of an introduction, let's talk about the specifics of it. And
so Steve,
yes.
If we could just for a minute, I have one question out here that I thought we might go ahead and address right now. Mm-hmm. And that is regarding corporate tax filing deadlines. Was there any directive on an extension for corporate tax filing, only for personal?
Personal only, individual only, individual only.
Yeah, and that makes sense because depending on the corporation or the kind of business entity, tax filing deadline would have been the 15th of March anyway, right? Yeah. For those companies whose fiscal year ended in December 31st. And then there's a slight change in the rule if you're not on an annual fiscal year end. But that date would have passed when they made the announcement about the personal tax extension.
They also did not change the estimated tax payment dates either. So even if you're an individual that's making estimated tax payments, the deadlines for those quarterly estimated payments didn't change.
Did not change.
Just the date of filing your return.
Yes, and Andy confirmed for us that the 15th March for pass-through entities also. So yeah, 15th of March. If you didn't make it, you better get to getting.
Time is behind you. Time
is of the essence. Yeah.
Yeah. All right. So let's dive in. So there is an all brand new program. I think it's widely known and recognized that restaurants were among those most severely affected by this pandemic that we've experienced. And now we have a new program called the Restaurant Revitalization Fund. So I'm going to walk through this in detail. And while I haven't read every provision, I have been through many summaries of this law, and hopefully we'll try and cover all the high points. And if you have questions about this, if we don't know the answers to them, we'll see what we can do to get them. So first and foremost, this fund is now set up with $23.6 billion to go towards specifically restaurant aid. And we'll talk a little bit about who's eligible for that, what type of restaurant and food services are eligible, and exactly how the math works, etc. $5 billion of that has been set aside for the smallest of restaurant businesses, those that are generating less than $500,000 a year in annual revenues. This is a free federal grant. It is not only a free grant, it is also a tax-free grant. So while you might get this wonderful gift from Uncle Sam will not be sending you a 1099 that you will have to pay tax on this gift. So again, I want to emphasize, this is a tax-free federal grant. This is not a loan program like PPP. Big difference. They have said in this fund that the maximum amount of the grant could be up to 10 million and no more than 5 million per location. We'll see exactly how that works as we walk through more of the eligibility on this particular program. The next thing is, this is available to any food service entity that owns or operates 20 or fewer establishments. So if you just have one or two restaurants, you definitely apply. If you have 21 or more, you are not eligible to participate in this revitalization fund. It is also only available for private companies. If there are no public companies that will be available to take advantage of this. And our audience may remember that there was a pretty loud outcry about public companies' participation in PPP program, even though it was designed primarily for small business. So in this situation, only private companies can apply. Another real interesting feature, and this seems to be a clear theme of the current administration, and that is that once the fund opens, they're reserving the first 21 days of application for women-owned, veteran-owned, socially and economically disadvantaged small business concerns. And Marquita, I'm very familiar with economically disadvantaged small business concern, but I really don't know what a socially disadvantaged small business concern is. Do you have any idea about that?
I don't. And we could do some lookup. I might do a little Googling on the back end here while you're presenting, and I'll come back and let you know.
Yeah, I meant to Google that. I had not heard that term before, so I'm not sure what a socially disadvantaged small business concern is, and we probably do owe our audience an explanation on that. But so again, just to reiterate, the first 21 days of program application are going to be set aside for women-owned, veteran-owned, socially and economically disadvantaged small businesses. Pretty significant set aside again. So let's talk about who is eligible to participate in this. And eligible entities include, first off, restaurants and any type of food stand. So a food stand might be any type of a hot dog stand, you know, that you might see, a push cart, that kind of thing, in a downtown environment, a non-permanent address location, if you will. In addition to that, food trucks and food carts that you might see in a fair or some other public venue are also available for this. It also includes caterers, meaning that caterers typically, you know, will have a central commissary someplace and deliver to folks in various locations. It includes all forms of saloons, inns, taverns, bars, lounges, brew pubs, tasting rooms, tap rooms, any type of that type of an entity is included, in addition to any tasting rooms. So, you know, when you think about being able to, when I was a kid, we used to, when I was in college, I should say, we were very close to a local brewery, and they had the sample rooms, and we always made it a point to go there every Friday afternoon and get lots of samples in ahead of Fraternity Row's celebration Friday evening events. And all of those type of premises where the public may taste, sample, or purchase products are now available. And then finally, any place where people basically assemble with the primary purpose of food. That is a pretty broad spectrum, and it seems to me that that makes a pretty large envelope of, or umbrella, I should say, of eligibility for folks in the food service businesses. So let's talk specifically about what is available. So how is the grant calculated for those that may seem to apply for this? So the primary way that it's done is it's based on the pandemic related revenue loss of the business. And in effect, everything in 2020 is deemed to be pandemic related loss. So there is a specific formula for it. It's relatively simple, and let's walk through it. So the first thing you do is you take your gross receipts in your business for 2019. And the question may come up, well, I opened my business in 2019, but I didn't open my business until May of 2019. Well, in that situation, if you were not opened for the full year, then what you do is you take your average monthly gross receipts during the period of time that you were open in 2019, you multiply that by 12, and that becomes your baseline for your 2019 gross receipts calculation. Once you have that, then you take your 2020 gross receipts and you subtract that from your 2019 gross receipts. And that will give you the base amount of the available grant for you. So basically the grant is designed to make up the revenue shortfall that you experienced in this pandemic related event. So there are some changes that have to be made to that though before you can actually see the money. And the change, the specific change to that is if in fact you were able to take advantage of the PPP loan in either a first and or a second draw scenario, you take the total available grant monies and you reduce the amount of first and second draw PPP loans that you received. And then what results from that is the total amount of dollars that you are available to receive as a grant. So for most businesses, if we think about first and second draw PPP loans, you know, the average loans are somewhere in the neighborhood of, that was 107,000 for first draw. It's a little bit lower than that so far on second draws, but for the sake of example, let's say you got 107 as a first draw and you got another 107 as a second draw. Well, that's 214,000 that you got that you didn't have to repay. And so that is in effect, then that in effect became a grant for you. And that would be taken off of any additional grant monies that are available to you. The interesting thing about this formula, and many people may remember that when the Paycheck Protection Program first came out as part of the CARES Act in March of last year, there was a tremendous amount of blowback from the restaurant industry, and the largest restaurant trade associations, the National Restaurant Association and others, all basically came out against it and spent a long time lobbying Congress about this was not enough and the right type of targeted aid for restaurants, primarily because it only covered employee wages, rent, and utilities. And there were a huge amount of other expenses. You know, when you force a restaurant to close and they got 2 weeks worth of inventory sitting in their refrigerator and they can't do business for the next 2 weeks, the restaurant all of a sudden takes a pretty big hit. So Restaurant Association and many of their trade associations took big issue with it. It looks to me like took Congress a while, but they've definitely reacted. So this is the formula, pretty straightforward. I also just want to call out, in case the question comes up, Marquita, if you have an EIDL or if you're a restaurant that fits this eligibility qualification and you took advantage of the employee reduction tax credit, either of those funds do not matter. So those don't reduce your grant availability. Just the first and second draw PPP loans reduce your grant availability in that regard.
Let's stay on this a minute, Steve, and I'm going to come back to the question you asked earlier about socially disadvantaged. I did get an answer for you on that, but before we do that, let's stay on this topic. So, you know, I have a restaurant near and dear to my heart that actually opened for business on St. Patrick's Day, 2020, and quickly closed 3 days later. So they really had no basis for revenue in 2019, but they did struggle and fight through 2020. and are still open and are coming strong. How would this apply to a restaurant that did not have even 1 month of average gross receipts in 2019 as a basis for this calculation?
There is a special provision for that, and we'll put that in the
Q&A.
when we load this up into
Great.
our YouTube channel tomorrow. I didn't pull those into this particular presentation. I should have done that, but there is a particular provision that allows for a calculation on that.
Okay, so the one thing I will share with you, Steve, about the who is socially disadvantaged, it actually is written into the SBA statute, and in general, it's socially disadvantaged individuals are those who have been subjected to racial or ethnic prejudice or cultural bias within American society because of their identities as members of a group and without regard to their individual qualities. The social disadvantage must stem from circumstances beyond their control. Then it goes on in parts 1, 2, 3, and 4, which we don't need to go into, to describe examples of that. In general, it simply goes to certain ethnic backgrounds. I don't see anything in here as an example that incorporates LGBT in the description. So it's mostly ethnic indicators.
Interesting. I wasn't aware that it was part of that. Yeah.
So yeah, there actually is it's 0.124.103 who is socially disadvantaged, and it's actually in the SBA guidelines.
Fantastic. Well, the objective is to learn something new every day, and if we can check that box.
We learned something today.
All right. This is the next part of this is really I think where we can see where potentially the associations really did get the ear of the legislators. So what we're going to talk about now is what can the grant be used for? So, you know, in PPP, we all know that they had very limited things that you could use the money for, and gradually what happened was they tended to expand the range of expenses that you could use the PPP monies for. In this situation, they came out and they've pretty well defined the range of expenses, and it's I think most restaurateurs are going to be very, very happy about what they hear. So first and foremost, the money can be used for food and beverage inventory. So that's, as we all know, and if you're in the restaurant business, that's one of the major expense categories of the restaurant business. Next is for payroll and paid sick leave. So that's probably the second largest category within the restaurant business itself. Next, mortgage, rent, and lease payments. And on the mortgage, it includes both principal and interest. So cover all of your fixed costs there, including utilities. Next, maintenance. And there is a special provision in there that also says maintenance is, the definition for maintenance is expanded to include construction for any pandemic-related items, such as if you had to add outside patio seating or things of that nature to your restaurant. So if you had to put enclosures in, if you had to put, you know, different sneeze guards in, if you had to take the extensions to the booth up to the ceiling with plexiglass, all construction related expenses related specifically to the social distancing laws and regulations or pandemic precautions, excuse me, all of those things are now covered as well. That's a big deal because a lot of restaurants obviously had that expense. It also, of course, includes all PPE and all cleaning materials used within the food service facility. And then, frankly, they have a large catch-all that says, in essence, all other operational expenses of the business. So what this does not say is owner profits or you know, loss of profits in the business. This is designed to cover the expense side of the ledger, and it looks to me like it covers basically every operating expense that a restaurant would normally have, and then all of the special operating expenses that a restaurant may have experienced over the course of the last year or so. So this is, Marquita, I think you'll agree, the widest use of funds that we've seen of any of the programs so far.
Yeah, I mean, it's difficult to think of anything that couldn't potentially be included if it's on an expense line item, short of certain categories of payroll. I mean, payroll is here, but you know, I'm waiting for you to tell me this, Steve, whether or not that payroll to the owner over $100,000
There's
is
no exclusion.
No exclusion. Wow. Okay.
No exclusion that I was able to see. Yep.
Okay.
The big change to that is that, as you and I both know, Marquita, a lot of restaurant owners, they may not pay themselves as part of the payroll. They may take profit distributions instead. So in that situation, distributions are not allowed. So they may have to change the way they think about compensating themselves.
Yeah. Yeah.
Yeah.
But no, as you said, Steve, this is far-reaching in terms of the categories of expenses that could be included. It's phenomenal.
Yeah, I think it's clear the lobbyists probably got their way in this one, right? I think they may have done a pretty good job of telling the story of what's needed. So next big thing is, it applies to virtually any place where food and beverage is involved, and it covers virtually all the operating expenses of a business like that. How do I apply? How do I get in line? So again, I want to start and remind everybody that this is going to be a government direct program. So very much like the EIDL program, very much like any of the employee retention tax credit programs, very much like the proposed shuttered venue operators grant. These are going to be government direct programs. So you will not have to worry about going to a community bank or a community lender to apply for these. The SBA will have a provision on its website. They do not yet, but it is designed to be a program that would be administered by the SBA. And again, I just want to remind our audience that this is going to give priority for those women-owned, veteran-owned, socially and economically disadvantaged small business owners. So those folks will be given preference, and by what I saw, the first 21 days of application will be designed specifically for them. Now, this is going to be very similar to the way they run or proposing to run the shuttered venue operators grant. And by that, I mean, you must have a DUNS number first and foremost. Now this is Dun & Bradstreet number. That's what the DUNS number is. DUNS is an acronym for Dun & Bradstreet. So for your business, how would you know if you have a DUNS number? What you would do is go to this website, go to dnb.com/DUNS number, and you can put in the name of your business and find out whether Dun & Bradstreet has already issued a DUNS number in your business name. If not, you can apply for a DUNS number right there on their site. And it takes a couple of days to get that DUNS number back from them, and it is free. There's no cost to do that. But basically, you've got to register your business within the Dun & Bradstreet system in order to get that DUNS number. So now that you've got your DUNS number, what do you do with that? Well, then you got to go back over to the government system, and the government has what they call the SAM system. And this is, if you want to do business with the federal government, you got to be registered in the SAM system. And this takes approximately 2 weeks to get done, and you must have your DUNS number to get started. There's no fees associated with this. It will ask you a lot of questions about your business. I strongly encourage you to have your most recent tax returns available in front of you, because you'll have to put information in about the revenues of your business and the income from your business and the number of employees and many, many specifics about your business. It will also ask you your business incorporation date, which you'll get off of your tax returns, and things like your business activity codes. So this is a relatively comprehensive application process. It is all done online. And once you put the information into the SAM system in a normal day, it's going to take about 2 weeks for you to get the registration back from them, and you will get it back via email. Now, the reason I emphasize normal is because keep in mind that there are more restaurants in the United States than any other business type. So once word gets out that this restaurant revitalization fund is available, I'm sure there are going to be a lot of businesses that are going to be pinging the DUNS system to see if they have their number. And many of them probably are not in the SAM system. So I'm just offering a little word of caution that we have learned through experience in this over the last year, Marquita. I would expect that the SAM system may become overloaded at some point in time. So be prepared to, get into that system. And when you do, and when you are able to get in, be prepared to be able to spend the time to get it complete, because I can just foresee that there may be a period of time where that system begins to slow down and get bogged down, and folks may have trouble with it.
Yeah, you're right on that. And hopefully we can maybe shadow some of our restaurant friends who have to go through that process and share information in the future about how how delayed it may be. I do have one question related to this chart, and that is, what is day one in the context of the first 21 days? When does that portal open for the groups that are described as having special access for the first 21 days? And hence, when would day 22 be to allow people who are not in those specific economically disadvantaged groups to be able to begin applying?
The short answer is we don't know yet. So it hasn't hit the SBA.gov website yet, and there's no information about it yet on SBA.gov. Only thing I can assume is that, probably the folks at the SBA, keep in mind, I mean, those people, I think they're angels on earth, as we've talked about many times. Those people have worked more in the last year than the agencies produced in the last 30 years combined. So they've done Herculean efforts, and now they have a whole new program that they got to bring to market. Yeah. So remember, the Shuttered Venue Operators Grant Program was part of the Economic Aid Act that went into play on December 27th. And now that's not even open yet. So here we are at March 18th, and that's not open yet. I would imagine they're going to get better at this. Hopefully it won't take 3 months to get it open, but again, it hasn't hit their website yet. But what they have come out and said is that once the application process does hit their website, from that point forward, the first 21 days are reserved for those type of entities.
Okay, and what I recommend to our listeners today is stay in touch with us. Track this webinar. We will certainly be updating from there. And I believe, Steve, there is a mechanism to go to the SBA website and register for updates.
Yep.
So you may at least get an indication directly from the SBA as to what sort of progress they're making on bringing these programs to the market.
They just did that recently for the Shuttered Venue Operators Grant. So if you go into the information page on SBA.gov and go into that Shuttered Venue Operators Grant, there is an area there where you can register for updates specifically related to the SVOG. I would imagine they'll probably have a similar thing that happens for the Restaurant Revitalization Fund. So great call, Marquita. All right, so hopefully this will provide some information about how to apply. And folks, we've told you how to apply, who's eligible, what the grant looks like, so you can calculate what your own eligibility is up front. I want to emphasize this is tax-free money. Basically, the government's giving away the money that we send to Washington back to those that need it. So this will give you the specifics of it. And as we've done over the last year, as some of the implementation guidelines change on this over a period of time, we'll bring you that information as soon as we get it. So with that, I'm going to move on to talking about some of the other changes and some of the other existing programs. So that's the Restaurant Revitalization Fund, the newest program available in the COVID aid portfolio. So the first thing I want to touch on is sick and family leave credits. We haven't talked about this in a long time. So I know when the CARES Act first came out, this was one of the main programs, and we did a lot of discussion about this a year ago, but it kind of fell off the radar after that period of time. Well, guess what? It's back. And now they've basically extended it. So they extended the provisions of the sick and family medical leave credits out to September 30th of 2021. And they have also said that for businesses, the compensation that you provide to your employees between April 1st and September 30th, and while that says 30/31, it actually should say 2021. It's just for this year. It doesn't extend indefinitely for the next 110 years. It is covering all eligible wages up to $12,000. So they raised it from the original CARES Act, which was at $10,000. And they also raised the coverage period of time. It used to be 50 days. So an employee could be out on family and medical leave for up to 50 days. The employer has a responsibility to cover those expenses. They've raised that up to 60 days. So a couple of enhancements in that regard. And again, these credits are reimbursed to you as an employer. So the law made it mandatory on employers that they had to provide sick and family medical leave, paid leave for their employees due to pandemic-related items. But the law also then said the government will reimburse the employer's expense for those particular dollars that the employer has to expend. So a little bit of a change in those areas. I want to get into specifically next is PPP, our favorite program. Paycheck Protection Program continues to evolve. Well, the big changes here are that they've added another $7.25 billion to the fund. So even though it didn't look like they were going to run out of money in the fund by the deadline, they added another $7.25 billion to it. I guess one of the most major changes is they said that originally, if you'll remember, they said if you were eligible for the Shuttered Venue Operators Grant as part of the Economic Aid Act that the prior administration passed, you couldn't take a PPP loan. Well, now this changes that. So now if you were a shuttered venue and you had elected not to take a second draw PPP because you didn't want to mess up your eligibility for the Shuttered Venue Operators Grant, now you can also go and get that second round PPP. Probably the most significant change to PPP is the House of Representatives just voted on Tuesday to extend the deadline from March 31st to May 31st. So basically a 60-day extension. The Senate has already said that they are going to act on this, and the majority leader expects passage. So it is assumed that this will be on the president's desk soon for signature. So right now, as we sit here, and this information is as of Monday, there was approximately $110 billion available for disbursement in the second draw PPP program. So seems to be plenty of funds available, and the level of lending in that program has slowed down a little bit. So looks like Congress is going to extend the deadline and give everybody a longer window of opportunity to apply. And certainly those shuttered venue operators may now come into the mix and begin to apply, and that will open up eligibility considerably.
Steve, one thing I am looking for on PPP as a revision, and we haven't seen any guidance on this yet, is those of us, including Marquita Wiley, who applied as quickly as we could and and this is specifically for the single member LLC or the sole proprietorship rule. Those of us who applied really early took that calculation number for our eligibility from net profit, and that has changed now. So I would hope that at some point we might see some guidance that would allow those of us who applied early to go back and get that incremental money that is the differential between net revenue and net profit.
Mm-hmm.
You know what I'm talking about?
Absolutely.
Yeah.
And I think the other thing, Marquita, that we've learned over this last year of tracking these various pieces of legislation through and then seeing what the final bill looks like, it always comes out a little different on the finished end from where it goes in on the front end. So we'll have to see. Obviously, there's a bill in Congress right now specifically targeted to PPP. So
yeah,
well,
you never know. The early bird doesn't always get the worm, right?
Well, in terms of government aid, it seems like it's been the opposite of that, doesn't it?
I don't know.
Man, the only thing that ran out and didn't get fixed was the EIDL grants, right?
Yeah.
I mean, they gave the EIDL grants, ran out of money early, and they have never gone back and made a significant change to that.
Yes, yes.
However, they did make some additional changes to EIDL, and with that, we'll jump in and talk about those. So the first thing they did was they added another $15 billion into the funds for EIDL. So the Economic Injury Disaster Loan Program is still open, still has funding available to it. I think Congress saw that they may run out of funds at some point in the future for that, and so they basically upped the funding a little bit to provide additional availability in economic injury disaster loans. So just for our audience sake, just reminding them, these are long-term, basically 30-year loans, very low fixed interest rate, direct government loan, and they went pretty quickly in round one. The advance grant, which was basically the gift part of that, went the quickest of all, and they did reappropriate funds into EIDL with each of the prior legislation changes. So the same thing has happened again here with this one. So they've added another $15 billion. Clearly the objective is not to let this fund run out of money again. So big changes there. The next thing is they have added some targeting. So again, I think we're seeing this as a constant theme from this administration. They are really focused on trying to help those on the lowest end of the spectrum, if you will, and make sure that there's equal access for everybody. And I think that's a very worthy target. So particularly for EIDL, they've added some specific targeting. If you suffered a revenue loss of greater than 50%, automatically you go to the front of the line. So when you do your initial application, there are some things that kind of boost your eligibility. If your business is located in a low-income census tract, that's another thing that kind of pushes you to the front of the line. Or if your business has less than 10 employees in it. So those sole proprietors, Marquita, that are also eligible for EIDL loans, it automatically moves them up in eligibility as well. Most significant change is for all EIDL borrowers, they've extended the deferment on the first payment. It was previously 12 months. So if you received an EIDL loan back in April of last year, you would have been scheduled to make your first payment in May of this year. That's only 60 days from now. Now they have added another 12 months to that deferment period of time. So you won't have to make your first payment until 24 months following the origination of your loan. So that's a pretty significant change, I would say. So big things in EIDL as well. So with that, let me move into the Employee Retention Tax Credit. This is also a very significant change as well. First and foremost, everybody remembers that the Employee Retention Tax Credit was in place as part of the original CARES Act, one of the original provisions, and it had limited the availability up to about $5,000 per employee. Well, in the Economic Aid Act in December, they expanded that and made it expanded the eligibility through the first and second quarter of 2021, and then expanded the amount of money up from $5,000 a year to $7,000 per employee. Now what they've done is they've extended it throughout the entire year. So it's $7,000 per employee per quarter. That is a refundable tax credit. So let's say, for example, that you file your 941s in the first quarter and you claim the credit, and you've got, 3 employees, and your tax bill is $3,000, but you're able to claim up to $21,000 because you can claim up to $7,000 per employee. They'll write you a check for the difference and send it back to you. So this is a pretty significant form of tax credit that's being enabled specifically for businesses. But it's not every business. You have to qualify for the credit. And the primary qualification is that you had to be affected by the pandemic, either in a revenue loss or via a business shutdown. So you got to look at the qualifications on this, but it is a significant amount of money available out there. And it's, in our discussions, it's one of those things that not a lot of businesses were familiar with, but I think the accountants and the payroll companies of the world are doing a pretty good job of making sure that their eligible clients get this advantage of this credit. One of the other things that they've done is they have expanded eligibility for this for startup businesses. So if you started a new business after February 15th of last year and you have annual revenues of less than $1 million, you are now eligible for this tax credit. And so that's a change in the law that expands the eligibility of businesses that can take advantage of this. They do cap it at a total of $50,000 per quarter. But again, it's an expanded level of eligibility for those businesses that started after February 15th. They've also started another new provision. If you were a severely financially distressed employer and you had gross revenue losses of greater than 90%, all of your wages are now eligible, regardless of the number or amount. So this is a pretty significant category. And obviously this is, if your business falls within this category, you got pretty significant things that you're worried about. But this is another way that the government is providing some aid for even those that may be of the highest risk. So again, huge changes to the employee retention tax credit. If you've got questions about this, we'll certainly endeavor to answer them, but remember that your payroll provider, I'm sure, are going to become experts in this area as well, and they'd be a good place to go to answer your questions also. Yeah.
Steve, just a clarification on the very last bullet point. Mm-hmm. It says all wages are eligible. It's the tax component of those eligible wages, or is it truly the gross wage amount?
No, what happened before was they limited you to a maximum wage of $100,000.
Ah, so I understand
now.
So
what they did now is take the cap off.
Gotcha. Okay. That makes sense. That makes sense. Going back to one question on the IDL2 on the prior screen, mm-hmm. You had mentioned the deferral period for EIDL. And the question that we have is, does the EIDL loan begin accruing interest at origination date, or does that interest accrual cease, or is it paused until the deferral period is over?
That's a good question.
The rules on that?
My recollection is that it doesn't defer the accrual period; it just defers the payment period.
Okay.
But that's a good question, Marquita. We'll go back and look at that program as a whole and see if we can get an answer to that.
Great, thanks.
I'm sure we have the answer to that, and because I remember we went through that in a pretty detailed way. I just don't have it in the front of my memory today. All right, so we talked about employee retention tax credit. I want to go into Shuttered Venue Operators Grant because there's been an update there as well. First and foremost, they added a $1.5 billion to that fund as well. Interestingly enough, the nation's largest theater chain is AMC, and many people probably don't recognize that AMC is a Chinese-owned firm. So many of the largest movie theater chains are foreign-owned entities, but this program is really designed to impact the businesses that have been affected by this. I wonder about whether or not some of those larger foreign entities will be able to apply. Again, they added another 1.5 billion. They have come out and said that they are going to start accepting applications in early April of 2021. So finally they have given us a target date and said early April. So I would say, to read that more appropriately, sometime within the next 30 days, that application window is going to open up. So again, you want to be prepared for that if you're in this particular space. As we talked about earlier, they did remove the exclusion for the PPP loans, but keep in mind that the amount of your grant will be reduced by any PPP loan that you receive after December 27th. So if you go and take a second draw PPP loan, and let's say, for the sake of example, that loan is $100,000 and you're eligible for $1 million in grant, because the grant is basically 45% of your 2019 revenues as a whole, your total grant will be reduced by the amount of the PPP loan that you received. So again, I still think it's when you think about that, Marquita, it's still a pretty fair assessment. It after all comes out of the government's tax revenues, right? So you end up with virtually the same amount of money.
Agreed. And the thing to note here is that if that PPP loan was in the first round back in the spring, it would not be impacted. That date of December 27th is a significant date.
Yep. So while they changed it and removed that exclusion that was part of the Economic Aid Act, they basically just kind of reconfigured it into this to say that you could get that PPP, but you had to reduce your grant amount by the amount of that loan. And then again, we just want to remind everybody that the Shuttered Venue Operators Grant Program is exactly like the restaurant fund. You're going to have to get registered in the SAM system, which means that you're going to have a DUNS number. So make sure that if you are eligible under the Shuttered, or believe you're eligible under the Shuttered Venue Operators Grant, go check your DUNS number, get your DUNS number, get all your business records together, and then go get registered under the SAM program. So, Marquita, here we are, an hour's worth of additional changes to talk about to all these aid programs. Who would ever thought?
I tell you, this is something, but it's all good, because I think it really makes it makes money available, and it makes a recovery opportunity available to businesses that may not have been so easy. It may not have been so easy to get it. And I felt that way at the very beginning, when everything was based on payroll PPP, with the PPP loans early on. Now this has really expanded to a lot of operational and expense categories that can be covered with these kinds of loans. I want to make one comment, and I'm going to turn it over to you, Steve, to close the webinar out. And that comment is, one of the things that all of these changes say to me is, you have to know your financial records like the back of your hand. You need to know your payroll numbers, and you need to know your profit and loss numbers. And I will tell you this, as a result of some of the changes in these regulations and the updates that have come over time, for me and some clients that I work with, I can tell you off the top of my head, what was gross revenue in 2019? What was gross revenue in 2020? What was gross revenue by quarter both years? And then also certain expense lines, I can tell you the number, because I have gone back and used those numbers to recalculate over and over again. The bottom line, though, for me, is to say to all people on the webinar, whether it's your business or clients that you're working with, you need to have those updated and to the penny, updated P&L statements so that you're ready and set to go ahead and make applications for these programs, because early birds do get the worm ultimately.
So
Steve,
true. So
it's
true.
all yours.
So true. And that's what CEO to CEO, one of the founding parts of CEO to CEO is all about financial literacy. And Marquita and I spend a significant amount of our time every month teaching financial literacy, teaching bankability and how to effectively use capital in your business, teaching the value drivers of really putting an improved net worth into your business. And boy, it never ceases to amaze us how small the level of financial literacy is. So I was just thinking, Marquita, as I was listening to you, this may be one of the real silver linings of this whole pandemic is maybe financial literacy will be much better appreciated within the business community, particularly in the private company end of the business community. So
yeah, agreed.
So folks, again, we thank you for your patience. We weren't here last week. We knew there was a lot in the program. It took us a while to dig through it. As you can see, huge new program with the restaurant revitalization and lots of changes to many of the other existing programs. We are very appreciative of our audience. We do this for you, and we hope that this provides some value to you. If it does, we encourage you to share it with others in your community that could benefit from it. We don't make anything from it. It's solely a service that we provide to the business community, and we hope and pray that you all will be able to take this this overview, take this advice, put it to use in your business, and help it put you in a position in 2021 where you can really pivot and thrive into 2021 and make your business even stronger than ever before. So again, we're honored to have you. We thank you very much for your time and attention, and our commitment is we'll be back to you with changes as they arise. So Marquita, thank you very, very much for your stewardship. And while we won't see you next week, we'll look forward to having you back the following week as we continue in our weekly journeys.
I'll see you in 2 weeks. All the rest of you will be here without me next week.
Outstanding. Make it a great day. We'll talk to you later.
Bye-bye.